income categories. So that's one cause of worry. And the second cause of worry is that the food inflation, if it stays high persistently, then and if the economy is doing well, then it can very quickly move to the other parts of the economy and make the inflation generalized. So that's the risk that I think that comes with high food inflation, which is persistent. So it's the biggest worry. The number one worry is food inflation right now.
Right. Like we've touched upon, some of the commodities within food continue to remain elevated. Pulses is one, vegetables is another category. Was the expectation to see a lower print on both of these accounts as well this time around?
Well, I think it's very hard to predict what will precisely happen to pulse inflation or cereal inflation. Yeah, I think the only point I would like to make is that they seem to be coming down, but a lot depends on what kind of output we get from Kharif. And for sustained decline in food inflation, what really matters is how will the monsoons play out in the coming year. So yes, I think I would say that food inflation will somewhat soften, one because of the large base effect, but for durable gains, I think we need good rains in the coming year.
All right. And Rabi sowing trends so far do indicate a pickup. So there is more reason to expect some relief going forward. Would that be right?
Yeah, I think yes, if you go by Rabi sowing. But I think the point to remember is that the water reservoir levels are also lower this year. So Rabi is an irrigated crop and it's not fed by the rain. So I think if the irrigation particularly in reservoirs, irrigation potential of reservoirs comes down, that means less water to service the crops, and that can have some impact on yields. I think that's one part of that. Yes, I think the sowing is caught up, which is a good thing, but I think you also need some other inputs to have a very bountiful production.
Okay. All of last year, we saw active supply side intervention from the government, be it when it came to selective vegetables, key vegetables, such as onions, for instance, and of course, pulses and cereals. So if the latest figures are to indicate, and given the fact that we are just a few months away from the upcoming general elections, would it be fair to say that we can continue to expect the government supply side interventions to persist?
Yes, I would say so, because I think the food, keeping a tab on food inflation is very important, and particularly in an election bound year.
Okay, all right. And by when can we expect significant downside to start showing up in food and beverage inflation, specifically in some of the commodities that we've spoken about, like vegetables, of course, and also pulses?
Well, I think pulses inflation is a bit of a problem because we also import pulses, and I think a lot depends on at what price we are able to import. I think government can, of course, subsidize them and keep the prices low and bring inflation down. But I think there will be a mix of things that will play out. I think one is, of course, we try to restrict our exports wherever the pressure is, and we also try to restrict or rather promote imports, I mean, wherever it is possible. So clearly, I think there are a host of measures that are deployed, and I think we will see them continue, and we will also see food inflation come down. That is our expectation, and on that expectation, we are predicting CPI inflation to come down to around 4.5% in the next fiscal.
Okay, all right. So, I'd also like to quickly shift focus to industrial production. It's grown by 3.8% for December. We did see a fairly low print the last month. So, given that, does this come as a little bit of a relief?
Well, I think if you look at the PMIs for manufacturing, they're reasonably in the expansion zone, healthy expansion zone. And some ups and downs in manufacturing activity are often seen. I mean, so I would still say that the manufacturing activity will remain reasonably healthy even in the coming year. provided I think the input costs don't go up that much, provided the freight issues that are stemming up because of the Red Sea conflict, the problems in the Panama Canal. I think all those things can create headwinds for exporting manufactured items. But otherwise, I think we should see some shift away from services towards manufacturing also, because the pent-up demand in services will soften, I think, to some extent. So all these things mean that the manufacturing will do reasonably well. Now, I think apart from the supply side bottleneck, there's other issue as well, which is what happens to the global growth. And IMF is predicting steady growth in the world economy. And they are also predicting very interestingly that the trade growth will be higher in 24 compared to 23, which essentially means that exports may not suffer to that extent. So that's also a support for domestic manufacturing. Yeah, I would say that it may not do as good as it did in 23, but it will remain reasonably healthy.
Okay, all right. I'll also quickly welcome my second guest, Siddhartha Sanyal, Chief Economist and Head of Research at Bandhan Bank. So thank you so very much for taking time out for us today. We've seen the figures come out barely about 10 minutes back. Inflation has gone down by a little bit compared to the last print we've seen, whereas industrial output has seen a little bit of an uptick. So would it be fair to say that in all, broadly, these figures do appear to, can we say that these are positive figures to begin with?
Oh yes, you can. In the sense, while there was clear expectation of numbers moving a little lower, I think as and when you get to see numbers moving lower in the sense in case of inflation, as and when you get to see that, you get a little greater degree of comfort. And very clearly, as you have noticed, that in this particular quarter and the next quarter, there are projections of inflation numbers staying in the vicinity of 5% or a little higher. But eventually, there are projections in the second quarter of the next financial year when inflation numbers moving to a 4% handle. So I think that this way it's very, very critical that over the course of the next few months, if we get to see that numbers gradually and consistently keep moving lower, I think the expectation about a slightly softer set of numbers towards the middle of the next financial year becomes all the more reinforced. And I think that's a very, very crucial phase. From a policy point of view also, while there is not too much of an expectation of any quick action on the part of the monetary policy side, etc., if that consistently we get to see for a few more months, maybe a couple of quarters, then actually opens up a policy space a little more, which can be so very crucial for both growth and policy support to the economy in general.
Right. I do want to ask you as well about food inflation. So food and beverages inflation has come in at 7.58%, and that is a tad bit lower than what was the print we saw in December. But at the same time, a lot of sub-commodities, vegetables inflation continues to remain elevated at 27%. Pulses and products inflation has come in once again at 19.5%. Cereals and products, though, does seem to be offering a little bit of a relief. It's come in at 7.8%. So what's the takeaway? The fact that within the food and beverages category, we continue to see elevated inflation in a lot of these items.
Well, I think the way things are panning out with greater frequency of meaningful weather aberrations at various parts of the country, or if not at various parts of the globe, you need to deal with this particular. You need to learn to live with this kind of a situation, and we are all doing that. So, very clearly, for the headline inflation going ahead, food inflation will actually remain a joker in the pack. We do have some clarity about how core inflation will look like, potentially even how fuel inflation might look like, also energy inflation, barring any episodes of fresh enhancement of geopolitical uncertainties. But how exactly on a month-to-month basis food inflation, such as some of the perishables, etc., like vegetables and all, as you mentioned, will possibly remain much more volatile, and we have to learn to live with that. There's no two way about it. So basically what happens is that based on whether we have seen some weather event in the very near term, and whether we had seen something similar about a year back, the optics of the numbers can fluctuate quite heavily. I think to some extent what we do take some kind of a moving average kind of a approach and try to see directionally in which way this is moving. And that actually has given us better insight, I can say, rather than just relying too much on the month-to-month or focusing too much on the month-to-month movement, because these numbers had been and will remain volatile for a while.
Okay, all right. Mr. Joshi, I do want to ask you about core inflation. This is a trend we've continued to see in the past months. While food and beverage inflation has remained volatile and on several accounts fairly elevated, core inflation has continued to provide comfort and is very much clearly on a downward trajectory. What is the reason for that? Do you think that it's also a reflection, to some extent at least, of slower demand?
I think it's, see, overall GDP is still doing quite well. I mean, so I won't say that overall demand is that weak, but it's a result of lower input costs. I think if you look at metals, if you look at other commodities, even oil for that matter, I think the prices have been reasonably contained, I think, in 23, 24 till now. So I think that has an impact, and that actually is getting reflected as better profit margins of manufacturing companies. And also, I think they're passing on some of it to the end consumer. So it is also reflecting in lower core inflation. And I would say that it is the greater contribution of lower food, lower core inflation comes from lower input costs.
Okay, all right. But we have seen a little bit of normalization in commodity prices in recent months. So what is the trajectory that we're looking at, even for core inflation?
For next year, I think, see, because the base is becoming smaller, so I think you'll have a base effect next year. And a lot depends on what happens, as I was mentioning earlier, what happens to the freight costs, what happens to the oil prices. Right now, I think we don't see much upside to commodity prices, nor do we see oil exceeding on an average $80 a barrel. So in this scenario, I think you will see core inflation only tick up a little bit, not too much. I mean, and that is why I think we are coming to a forecast number of 4.5% for next year. That's premised on a little higher core inflation than what we are currently witnessing, but I think still contained.
Okay, all right. So, Mr. Joshi and Mr. Sanyal, I do want to understand what you're making of high-frequency indicators at large at this point. We'll start with you, Mr. Sanyal. We've got figures for industrial output, inflation. We've also already got figures for manufacturing PMI as well as services PMI. And of course, the outlook coming in also appears to indicate that this quarter too, we're doing better than we had earlier anticipated. Is that the reading so far of the broader economy, Mr. Sanyal?
Broadly, I think the overall prognosis look good. In the sense, growth numbers had been in line with market's expectation, if not surprising, somewhat slightly on the higher side, more often than not, even in terms of the high frequency indicators. And also that was the case even for the overall headline GDP numbers, etc. So overall growth indicator, headline growth number, as well as constituents and indicators, more often than not, there had been a bit of a bias towards a more desirable set of numbers. I think that particular trend continues. Even expectation about global growth is slightly less gloomy of late. So overall, that particular pattern can continue. Inflation of late, we have seen a bit of softening, a bit of cushion, bit of comfort, very clearly of late. But having said that, as I mentioned, that very clearly the joker in the pack in case of headline inflation is food inflation, the perishables food part in particular, and they can actually continue to surprise you every now and then, but potentially in either direction. So depending on which side they move, that possibly will be determining that what is the trajectory for the overall headline inflation. Having said that, if we at this moment look like we are on course towards a 4% or a low 4% kind of a number by the mid of the next financial year. And I think if that turns out to be the case, that is clearly a very positive message, and potentially at that around that time might actually open up a little bit of policy space also.
Okay, Mr. Joshi, I do want to ask for your views on the same question as well. We have seen a little bit of a deacceleration, a little bit of a loss in momentum in some high-frequency indicators post the festive season. But all in all, fair to say that macroeconomic activity continues to remain resilient?
Yeah, I think it's fair to say that, and I think the GDP growth of 7.3% bakes in a reasonably good momentum even in the last quarter. And most macros are in balance. I think that's also more important. I think the growth inflation mix is somewhat better this month because IIP has gone up, inflation has come down. On top of that, I think a couple of days back, we got data on current account deficit, which is only 1% of GDP in the first half. And that, I think, that supports your external resilience. So I would say it is a mix of momentum and resilience which are playing out right now, which tells you that macros are in balance at this juncture.
Okay, I do want to specifically ask you about the rural economy. For a large part of last year, we did see the rural economy present a point of concern, though it appears that too seems to be on an upward trend at this point. What are we making of the rural economy indicator specifically? Mr.
Well,
Joshi?
I think, yeah, rural economy is a little complicated. I think we get more information on the urban economy, and urban economy definitely has been doing relatively better than the rural economy. And when agriculture underperforms, I think it does have spillover effects on rural economy. And that was also very clear from the rising demand for Manrega in the current fiscal year. So I think there are issues with some issues with rural economy, but beyond that, I think it's difficult for me to pinpoint, I think, whether it's improving or not, because we don't have enough information to conclusively say that it's on a improving trajectory.
Okay, and added to that, consumption too, all in all, does seem to present a continuing tepid picture. Would that be fair, Mr. Sanyal?
Well, consumption, there are two buckets. One is the discretionary part and one is the not so discretionary part. The areas which are more essential in nature, they have been relatively stable. So if you actually see even the RBI survey, which tries to predict up to 1 year ahead, that what exactly will be the spending pattern for households in terms of their consumption spends. The non-discretionary part remained fairly stable, if not surprising, slightly on the upside. To some extent, spells of high inflation also had a contribution towards that happening, because these variables are not necessarily real variables. These variables are monetary variables. But to some extent, on the discretionary side, we have seen a little bit of dampening more often than not, or at least in certain markets in the last few quarters. So I still need to see clear evidence that the discretionary consumption has turned a corner, has started coming back before believing that they will really be very, very strong going ahead. Otherwise, it's fair and more prudent to have an assumption that discretionary part is still has some room to improve, some room to grow. Just trying to touch upon on the rural-urban divide part, I think very clearly at the cost of repeating for possibly for the nth time in the same last few minutes, I tend to say the weather aberration parts incidents are impacting the rural economy a little more. So that has an effect in terms of impacting rural demand at times, but very recently, we have seen a little better sign in terms of demand, in terms of confidence, than what we had been seeing a few quarters back. And there also, given that inflation plays a very significant role, more significant role possibly in case of the rural economy in terms of determining the disposable income in the hands of people, inflation softening is helping. Also, I'm hopeful that in the coming quarter and a half, when the election-related spending come into the system, generally that has a slightly stronger effect on the rural economy than in the urban economy. So you might actually see a little bit of support there in the consumption pattern there, but a very, very near-term phenomenon.
Okay, all right. And Mr. Joshi, the same question to you before we can conclude this discussion. What are you making of consumption trends? And also to close, I do want to ask you, what is your estimate you are looking at for GDP growth for the full year? The RBIs as well as the NSOs, even though it's just the first advance estimates we have from the NSO for the preparation of the budget, does appear to have surprised on the upside. Is that your thought as well?
Well, yeah, the growth numbers did surprise on the upside, and I think the second advance estimates are due end of this month, and they will have only 1 month extra data. So there could be, I think, some mild downward revision, I think, but otherwise broadly, I think close to 7.3 that the first advance estimates predicted. And on the overall consumption side, I think the consumption is clearly lopsided. I think we all know about it. We have been talking about it. The premiumization is still on. The higher value items are doing much better than the lower value items. I think that's the trend we see. In consumption, we also see from the data that the central bank publishes is that the consumption is also getting more focused on borrowing side. I think that was for last fiscal year. Financial savings as a percentage of GDP had come down. I think my sense is that same thing would play out in 23-24 also. So consumption is also getting financed more, I think, because the younger generation particularly is more comfortable with the borrowing, and also consumption is shifting. I mean, if you see the pattern in consumption, particularly among the middle class, etc., I think you're buying more smart watches of various kinds. I mean, you're buying more electronics related stuff. I think so. There is a wearable market. That's what I was referring to. So there is a change in consumption taking place. People are buying houses, people are buying cars at much lower age than they used to. So there are some shifts taking place. But overall, if you go by the CSO's data, private consumption has been trailing overall GDP. Within that, I think there are some parts which have done extremely well, others which have not done so well.
Thank you so much. That's a great roundup for today's discussion. With that, we're completely out of time, but stay tuned. We have a lot more coming up on NDTV Profit. Thank you for watching.